In a world filled with get-rich-quick schemes and financial promises that rarely deliver, we decided to run a real-world experiment. Take $1,000 and see what happens when it's invested over a 30-day period. This is not a theoretical exercise or a hypothetical case study. It's a practical, transparent challenge designed to showcase what is possible and what isn't. When you put your money to work in a short time frame, this challenge is not about turning $1,000 into $10,000 overnight. Instead, it's a way to explore realistic expectations, diverse investment options, and the power of financial literacy. Whether you're a student, a young professional, someone just starting your investment journey, this video and write-up will give you practical insights into managing and growing your money. The rules of the challenge to keep things realistic and relatable. Here are the ground rules for the $1,000 investment challenge. Total capital: $1,000 USD time frame, 30 consecutive days. Must diversify across at least 3 investment vehicles. All trades must be legal and trackable. No leverage or borrowed money. Transparency is key. All investments will be shown with screenshots and updates. Week 1. Planning and allocation before investing a single dollar. We started with research and strategic planning. Here's how we decided to allocate the money. $400 in the stock market, $250 in cryptocurrency, $200 in peer-to-peer lending, micro-lending $100 in a high-yield savings, account or money market fund $50 set aside for learning materials or courses to increase future financial literacy. Each category represents a different level of risk, liquidity, and return potential. Let's break them down. Stock market, $400. We chose to invest in a mix of ETFs, S&P 500 ETF, growth stocks, Tesla dividend stocks, Coca-Cola Rationale. ETFs provide broad exposure and lower risk. Growth stocks offer high return potential, and dividend stocks provide small but steady income. By the end of week 1, we saw the following. SPY up 1.2% equals $101.20. TSLA down 2% equals $98. KO flat at $100 stock total, $299.20 crypto, $250 we diversified this into $100 Ethereum, $100 altcoins, $50 crypto is highly volatile. Within 3 days, the crypto portfolio went up by 5%, then dropped 7%, then stabilized. By day 7, BTC, $95 ETH, $102 altcoins, $47 crypto total, $244 peer-to-peer lending, $200. We used a reputable platform to lend small amounts to vetted borrowers. This kind of investment doesn't show gains immediately, but generates interest over time. A projected monthly return, 6 to 8% annually. By day 7, total earned, 75 cents. High-yield savings $100 placed in a digital bank offering 4% APY. Not exciting, but safe. Day 7 return, tilde. 33 cents in interest financial learning, $50. We spent this on a course on investing fundamentals, a book on behavioral finance, no direct return, but long-term value. Week 2, minor adjustments in monitoring, we observed some movement. Tesla rebounded plus 3%. Total stock portfolio rose to $405 BTC and ETH stabilized. Crypto now at $252 peer lending added 50 cents interest. High yield account grew by another 30 cents. Total portfolio at end of week 2, tilde, $960 week 3. Roller coaster ride, this was a volatile week, especially for crypto and stocks. TSLA dropped 5%, SPY stayed stable, CO rose 2%, ETH dropped 4%. BTC dropped 3%. Altcoins gained 6%. Peer lending remained stable with $1.20 earned. Total high-yield savings reached 75 cent stock portfolio. $397 crypto, $248 lending, $201.20. Savings, $100.75 learning. NA total value, tilde, $947.95 week 4. Recovery and final push in the final stretch. TSLA surged plus 6%. Pushing our stock total to $415 ETH and BTC gained slightly. Total crypto, $256 lending, added another $1.10. Now, $202.30 savings ended at $101 final totals. Stock, $415. Crypto, $256 lending, $202.30 savings, $101 learning. Intangible grand total after 30 days, $974.30 key takeaways. Short-term investing is risky. 30 days is not enough time to see meaningful gains from most investments. You're at the mercy of volatility. Diversification helps stabilize returns. While one category dipped, another often compensated. Spreading money helped reduce losses. Crypto is volatile, but tempting. The swings were wild. Gains can disappear overnight. It's not for the faint-hearted. Stocks are reliable, but slow movers. ETFs and dividends were more stable than individual stocks. Growth stocks are unpredictable. Safe options are. Safe high-yield savings barely moved the needle, but they preserved capital. Education is the best long-term investment. The book and course didn't bring immediate returns, but they shifted our mindset and built foundational knowledge. Conclusion: was it worth it? After 30 days, we ended slightly below our initial $1,000, but the challenge wasn't about profit. It was about learning how to invest, understanding risk, and getting familiar with different asset classes. In real life, investing is a long-term game. This experiment showed us that patience, strategy, and continuous learning are more powerful than chasing short-term wins. The key is to start, track your progress, and treat every dollar like a soldier working for your financial freedom. If you're just starting out, consider doing your own version of this challenge. Even with $100, call to action. If you liked this breakdown, make sure to subscribe, like the video. Drop a comment about your own investment experiences. What would you do with $1,000 in 30 days? Would you go all in on crypto? Or play it safe with bonds and ETFs? Let's build wealth together. One smart decision at a time. Post. Let's talk technical analysis. If you've ever seen candlestick charts and wondered what they mean, you're not alone. Today I'm keeping it super simple. Voiceover. Candlesticks show for key data points for a stock or crypto. The open, high, low, and close price. Green candles mean price went up that day. Red means it went down. Post. I checked Apple and noticed a classic doji pattern, which often signals indecision in the market. It doesn't guarantee anything, but patterns like these are what traders watch for. Day 16, dividends and passive income. Host, but reinvesting them over time? That's where the magic happens. Today, we got our first dividend. VTI paid out a small dividend, about 68 cents, directly into the account. Voiceover ETFs like VTI include hundreds of dividend-paying companies. You won't get rich off one dividend, that's FOMO. Host. This is why long-term investors love dividend stocks and ETFs. It's like getting a tiny paycheck just for owning something. Same with fear and panic. You see red, and suddenly you want to sell. Day 17. Emotional investing and avoiding FOMO. Host. Having a plan beats guessing. Let's talk emotion. It's day 17, and I caught myself refreshing the crypto chart every 10 minutes because Bitcoin surged 7% overnight. Voiceover, FOMO, fear of missing out, can lead to impulsive decisions. Host. If one section grows too large, it may expose you to more risk than you wanted. The best investors have rules, whether it's guarantee trade more than once a week or never buy during a spike. Day 18, portfolio rebalancing. Host. A surprise earnings miss from Tesla dragged it down 4%, and Apple slipped on weaker iPhone sales data. But in a real portfolio, it's something I'd strongly consider. Quick update. Crypto is now over 35% of my portfolio's gains, and stocks are lagging. Should I rebalance? Voiceover. Rebalancing means adjusting your holdings to maintain your target allocation. Host, for this challenge, I won't rebalance. I want to show raw results. Day 19. Unexpected setbacks. Host. The stock market just reminded me it doesn't care about my challenge. Voiceover. This happens. Earnings seasons are full of surprises. Even strong companies can have bad quarters. Host. Lesson of the day: don't tie your identity to short-term outcomes. This challenge is about observation, not perfection. Day 20. Cryptocurrency regulation news. Host. Big headlines today. A new crypto regulation proposal is causing ripples in the market. Bitcoin dropped 2%, Ethereum down 1.5%. Voiceover. Whenever regulation is discussed, whether it's taxes, security, or classification, crypto prices often react quickly. Host. It's a reminder that crypto isn't just about tech and hype. It's also about politics and policy. Stay informed. Day 21. Week 3. Wrap-up host. 3 weeks in. Let's tally things up. ETF, minus 0.2% stocks, minus 2.4% crypto, plus 9.2% P2P lending, $3.75. Total interest high-yield savings, plus 89 cents dividends, 68 cents from VT.